wrapping up our month, talking about financial literacy, and we really thank everybody for tuning in and listening to our show today.
We have guests.
We do have a guest.
And you decided to bring in one of your employees. Is that a safe way of putting this?
Well, one of my mortgage brokers for sure.
So can you fire him right now?
I mean, I could. I would never want to.
Why? Because he makes you too much money?
Well, I mean, that's definitely a factor, but Alex is like my number one protege and helper.
Protege?
Yeah.
I would say
keep him entertained.
I mean, somebody has to keep me entertained.
Yeah.
But you know what? Alex helps me with so much, in mortgage files.
Yes.
I wouldn't be able to do what I do every day without Alex helping me with what I'm doing.
No, I know. I'm only kidding around. He's
team environment,
definitely quality employee. I won't mention what you've said about him when he's not here.
I mean,
Yeah, we won't want to do
segue.
that. Exactly, segue. So why don't you just kind of be Todd Veinotte and take it over, because why not you ask him some questions?
Well, you know what? I ask questions all day long, but I'll do a little bit of an intro.
Yeah, do an intro.
Alex has been with us here over 5 years. He's actually had his 5-year anniversary. And he moved here originally from rural Ontario and, went to university in Toronto. And his parents own a restaurant over in PEI, and he'd never, ever been to Halifax before he moved here.
Why isn't he telling us this stuff?
Well, because I think I just do a really good roundabout way to do the intro.
Yeah.
And he's a super, super expert in mortgage lending, around private lending and alternative lending. And I really want him to give, us and the listeners a really good purview of what that looks like.
All right. What is alternative lending?
Alternative lending is essentially, I'd say if you don't fit in the traditional box, that is alternative lending.
Which is what? What's the alternative?
Why do you have to go to an alternative lender?
Yeah.
Per se? Well,
not per se. Why do you need to go?
Well, main reasons are credit, income, or if you're new to Canada and you're not established here yet.
Yeah.
So those are the main 3 reasons.
Okay.
And then private lenders, that's even a whole nother category. And then that's maybe if your house was half built and you ran out of money, they're the lender that's going to help with that.
It's got to be a stressful situation, eh?
Yeah, which actually happened to quite a few people.
I mean, just the cost of materials, Alex, right?
Cost of materials, right? So a lot of people were building, pandemic happened, cost of materials went through the roof, they ran out of money, and they needed a little extra to finish it off. So, yeah, that's a tricky situation. That's definitely something that we help with.
How many ulterior lenders are out there?
In Nova Scotia right now, we have 5. But in Canada, there's a lot more than that.
And you have access to all of those?
Yep. Access to all of them, yep.
Yeah.
Yep.
So what's a file? How does it look differently from a traditional file? What's it look like?
Yeah, so, I mean, for someone to go to an alternative lender, I mean, they're going to have a credit score of less than 600. That's typically one of the things.
I mean, sometimes they have great credit.
Sometimes they do. So on the credit side, sometimes it's less than 600. Sometimes bankruptcy, consumer proposal plays a factor.
Yeah.
Sometimes clients have great credit, but the income on paper is really low.
Yeah, exactly.
And, instead of maybe claiming a lot of income on the taxes, we have to go through a stated income program. So I'd say one of the main differences is the cost. So obviously it's going to cost a little bit more, and the down payment is more. So no more 5% downs with an alternative lender. That's a 20% minimum, and the interest rate's probably about 1 to 1.5% higher today. And there's going to be a lender fee as well. That's about 1.5 to 2% of the mortgage amount.
So to me, that doesn't sound out of reach, except for the 20% down payment. That's got to be really difficult for somebody who's already got some challenges financially to come up with.
It would surprise you,
That's
though.
thing.
I see some of these files. I'm on every file that Alex works on. I'm on every file that our team does. And it's really amazing when you tell somebody they need 20, 25, 35% down. Magically, a lot of the time, they find it.
Where do they get it?
They get it, from family. Sometimes they have other assets they sell. Quite often you see inheritances. I can't say
Is that a word?
right now.
You said
Is
it
that
right.
a word? Inheritances?
Inheritance.
Maybe it is.
Inheritance.
An inheritance.
Yes, and inheritance.
Yeah.
And a lot of big gifts, I think, right?
Yeah. Families giving big gifts, yeah.
So they have to prove, obviously, where the money came from, though. You can't just say, hey, I found this money on the street.
Yeah, cash is not accepted. Yeah.
Cash
is not king.
That's
Cash
right.
is not king, no.
Because of, what's the issue?
Anti-money laundering.
Laundering.
Mm-hmm.
Yeah, that time
You can wash your clothes, but you cannot wash your money.
There you go.
Because that would definitely be wrong.
Yeah.
And Alex, why don't you tell us a little bit about some of the alternative lending that you sometimes get involved with for self-employed people? Because there's more and more people that are becoming self-employed, and one day they're working for one lender, and another day, or one lender, sorry, like one employer.
Yeah.
Talk about lenders all day long. Like one employer, and then the next day they completely do a pivot, different industry, brand new self-employed. Are there options for those type of people? Because there's more and more Canadians becoming self-employed every day.
For sure, yeah. I think one of the biggest challenges as well is to go through a traditional lender like a bank. They have to be self-employed for 2 years, and not self-employed just for 2 years. You have to have 2 years of good tax returns, because the lender always takes the net income of the 2 most recent years' tax returns. And if the most recent year is lower, they're going to take that at face value. So you see a lot of people that were really impacted with COVID because their income went way down. So with an alternative lender, instead of looking at the tax returns, they actually use 6 months of bank statements instead. And we just essentially state their income on a piece of paper, how much money they make. So
and that's
the big
what
difference.
backed up by bank statements.
Backed up by bank statements, yep. And they list their own expenses, and pretty much the bank statements tell the story instead of the tax returns.
What if somebody's going through divorce, separation? Sometimes they need somebody other than a traditional bank.
Yeah, so that's a great solution for an alternative lender for sure. And the thing is, the alternative lenders do it on 1-year terms. So the thing is,
Always?
well, you can go 2 or 3 year terms, but the rate's a little bit higher. Yeah. But what we do is we put them on a shorter term, and then we can review the file each year to try and get them back to a traditional lender.
You have to pay new fees though if you renew it every year?
No, just one time.
Just one-time fee?
Yep.
So you renew after that next year, you don't have a fee to pay?
Correct.
I see.
Yeah.
Okay. The number of the percent of people fitting into this category, is it growing or decreasing?
That one's tough to say.
I would say there's more. There's more now than there were before.
Yeah.
Mortgage lending at one time, I think if you had a heartbeat, you could pretty much get approved. I would say there's probably more alternative lending situations here now.
The rules are getting stricter.
But yeah, and I think that's a really good point. When we talk about things like the stress test and things that happen with B20 and B21, it took people out of the box that might have qualified with a more traditional lender. And we have these conversations with borrowers every day, and especially with self-employed people, you either need to borrow, claim more money in your income tax, or you're going to pay maybe a higher rate on your mortgage, and they can kind of make the decision on what works best for them and, their accountant and stuff like that.
All right, so just before we wrap this up, a cautionary tale. Although you can find people mortgages through this channel, which is great, try and do everything you can to have your finances in order so that you don't have to go this route, obviously.
Exactly. It's only going to save you more money in the end.
Yeah.
It's a good Band-Aid, though. And it's good. And I always try to say, and I'm sure, Alex, you say the same thing, this is usually a short-term solution. How can we get you cleaned up, and how can you get into a better position that we can get you a better financing solution down the road?
Alex, did you have fun being on Mortgage 101?
I did. It was great.
Do you think you'll be allowed back at some point?
I think so. I think I behaved myself.
Well, Clinton and I will make that decision, and we'll let you know down the road, okay?
Okay, sounds
Thanks
great.
for sharing your insights. It's Financial Literacy Month.
I know, I'm only teasing. Alex Lavender, what's his title
Mortgage
again?
broker.
Yeah, mortgage broker. Thanks, Alex.
No problem.
We'll be right back.